Hello, everyone. Today, on July 30th, Tuesday, Microsoft reported earnings, which were, as I expected, that they were very good earnings, but they were not super wonderful earnings, which is what Wall Street is demanding to price these mega stocks, these Magnificent Seven stocks, to price them up higher. Microsoft's shares dropped in the aftermarket from about 423 to about 493 at one point. And they blamed slower Azure cloud growth for the price going down. Microsoft's Azure cloud services posted a slowdown in quarterly growth, disappointing investors anxious to see a payoff from huge investments in artificial intelligence products. The company's total revenue in the fourth quarter increased 15% to $64.7 billion, while adjusted profit was $2.95 a share, the company said. Analysts on average estimated sales of $64.5 billion and per share earnings of $2.94. So they beat both on revenue and on earnings, but it was not good enough for Wall Street. Microsoft's Azure cloud computing service, which has been its main growth engine in recent years, posted a 29% revenue gain in the quarter, which was decelerating from the 31% growth in the previous period. So it went down a big 3% from 31% to 29%. And this is supposed to be disappointing. It's like unbelievable. About 8 percentage points of that increase was attributable to artificial intelligence, which is up from 7 percentage points in the prior quarter. Microsoft shares fell about 6% in extended trading. They had closed at about $493 in New York. It was really about the cloud services number. It just needed to be a little bit higher, Doug Clinton, a manager partner at Deepwater Asset Management, said on Bloomberg Television. So the expectations are out of this world, and there was no way that Microsoft was going to beat it. In the last 5 days, Nvidia stock, NVDA, has gone down over 15%. Its chart looks horrible. It went below 120 and kept marching on down to 103. Things do not look good in the artificial intelligence world right now. Its relative strength is 37, so it's underbought. It's below its 50-day moving average, of course, and things are not looking bright for Nvidia at this point. I believe they report earnings around the 21st, so it has some time to contemplate whether its earnings are going to be up on the 21st, and I think they will be. And they might actually meet expectations because they just got some good news from AMD, Advanced Micro Devices earnings, which were reported today. In what is probably good news for Nvidia, AMD surges after demand for AI chips bolsters sales forecast. Chip makers' quarterly outlook exceeds Wall Street estimates. The company has been pushing it into Nvidia's turf this year. Advanced Micro Devices shares rallied after the chip maker gave an upbeat revenue forecast, underscoring that its new artificial intelligence processors are bolstering growth. Revenue will be roughly $6.7 billion in the third quarter, the company said in a statement Tuesday. Analysts estimated $6.62 billion on average. That isn't that big of a beat. This looks like it's sort of good, but it isn't blowing it out of the water, I don't think. Second quarter results also topped projections, and the company raised its forecast for so-called AI accelerators, chips used to develop artificial intelligence models. As we look at this chart comparing Advanced Micro Devices to Nvidia, they both have had a tough month, and they both have lost roughly 15%, with AMD losing 14.7% and Nvidia losing 16%. I expect this pattern to continue where they report good earnings, but it's not good enough for Wall Street and the market goes down. And I got the feeling that the market just wants to go down anyway, especially when the Federal Reserve lowers interest rates. That usually indicates that they think the economy is now bad enough to lower interest rates, which isn't all that exciting for stocks. Thanks for listening.